Hi traders, Anthony here. We just had a SOL paired with USDT. Okay, we've got a sell signal here. Do I want to take that? I'll set it up and I'll show you what we do. So I'm just going to go in with a sell. I'm going to set up a pending order above here. So we're going to go 181 and we'll take profit at 180.50. And we'll add a couple of zeros here to bump up the dollar value. $500 is a bit much. Make it 200, $100, go. I'm going to take this, see how overextended this is. So I'm just going to pull that down and we'll put the sell limit right on the dot because I want to fill. Probably a little bit late. Nope, there we go. Okay, I'm in. See how overextended that is? It's traded right out from the mean. So I'm just going to sit on this and we'll see how it plays out. Let's have a look at the higher time frame and see what's going on with this. So I'll go into a 30-minute chart. We'll open that up. Why do I like this short? Because it's traded back into, see back here we have the high of this range more or less here, and these lows here. So I mean it's generally not a bad setup. Resistance, resistance, support, support, resistance here. Okay, and it's right at the base of this range there. So I quite like it. So what we do at this point now that we've got this is, I'll open that up. So I'm going to take profit here. I'm going to close this. Okay, doing a voiceover here. I meant to take 70% and I closed 80 and left 120 on. Partial close. So now we've got money in the bag. So if we have a look at our account here, oh, that was $36. All right, so we've closed $36. Now, I meant to take 70% and I didn't. I made an error there. I wanted to get into some details about the stop loss and if you pull it down to break even, how you reduce your chances of making money. It's actually better to leave the stop loss above and lose 30%. Given you've taken 70, you're already in profit. What I want to do in this next section is set up a stop loss range. And then we'll go back in time and have a look and see how many times it got taken out. So the idea is we get in our position on the dot or better, which we have, slightly above it. Okay, so let's have a look. How many times, if that's going to be my stop loss, it's pretty tight, right? If we do that, how many times did that stop loss get hit? It didn't get touched here. Let's have a look at that one. And don't forget, we're looking for a 1-to-1 risk-reward ratio. So if we got in on the dot here and we copy that and paste it 1-to-1, see what I'm talking about here? This is why we take our money early and this is why I have a tight stop. Well, this is why I have a fairly tight target. So if we get in on the dot, don't compromise, okay? Don't chase the price. That was my entry. It wicked up and we got a close, 70% in the bag. That's not a loss. How many times did this stop loss get taken out and we lost money? In other words, the whole setup went against us and there was no profit involved. I think we've just been taken out there, but this is really interesting. Let's have a look at this concept. We'll take that. There's our target reached before stop loss. So what I'm trying to get at here is, if we take 70% and we lose 30 at a 1-to-1, the whole position is going to be in profit. How many actual losing trades were there? And you know, you go back with a parallel like this and you can kind of work out how many times you would have had a losing trade. I'm not talking about after you've taken 70% because that's a winning trade. All right, so far, these are all winning trades, every single one of them. And you just got to get the knack of trading on the dot. How far do you want to go back? This is SOL. I like it. I like it a lot. Not bad. Pretty reliable, if you ask me. By the way, if you want access to my indicators and my system or my tutorials, I'm doing this on a daily basis. And I'm demonstrating live how you can build your crypto account. So we've got what, 12 trades in here now without one loser. But what I want to say is I would prefer to actually have some losers in here insofar as we make more money because of that. Do you know what I'm saying? Let's lose some money to make some money. Let's do that. And here's a perfect example right here. From here on, I want to start to see some losing trades in my account. Okay, and here's why. We entered on the dot. There's our stop loss, target. This is where it gets really interesting. 70% reached. Depending on how well you read this, see how close this is? Depends on how you judge this. You don't want to go out too far, but you don't want it to be too tight. You could have taken 70% and you've got 30% left in. So let's say it got taken out. Well, it's a winning trade. You've won 70 and you've lost 30. 1-to-1 risk reward here. But let's say you kind of went up another pip. Either way, both ways. There's going to be a ton of opportunities like this where this $100, if that's what the value is of this range here on your 30%, turns into a couple of thousand or more. All right, and you will get these opportunities. We're talking a whole bunch of currency pairs here, and we're on a 1-minute chart. This is just the Asian session and it's quiet. Now look at the alerts coming in. Look at all the opportunities we've missed because we've been rambling on in the video. So this is where it gets really interesting, guys. So, you know, do you leave your stop loss there and start taking a few small losses? I hope you understand what I'm saying. Let me just find, look at this. Okay, 1-to-1 ratio. You've taken 70. You're risking the remaining 30, which if that gets taken out is going to be in profit overall. But if it doesn't get taken out, you just leave it there because it might wick. This could kind of come back down and then kind of find its feet. So you want to give it some breathing space. And then you're going to, absolutely, you're going to enjoy the ride. You know, you're going to get outcomes like this, where it just goes and goes and goes. And you just leave it in until the cloud closes if you want. But then the other strategy we've got trading this is this one. We're looking for these break out of the cloud situations. This is the ideal setup here. You know, you might have closed when the cloud closes, because that's generally what we'll be looking for, is to close the trade when we trade it. If we're still running, we close it when we run into the cloud here. If it's a green entry, we close on the first red triangle. The other setup we've got, and you can set the alerts, is where we get green triangles out of the cloud here. But there is a bit of a rule of thumb with that. It depends on your risk tolerance with this other strategy. I won't go into that. We'll just stick with these dots for today. Well, in this video, and then I'll do another video and we might look at this. This is the other situation here. This is the other one. We get a break into the cloud like this, and then when we get a break out of the cloud, 2 green consecutive triangles followed, then after the break out of the cloud, that's going to be our entry. It's a little bit late, but it gives you a bit more confidence in this trend. Okay, I've just had a bit of a break in coming back into this chart now, and we can see there's been a little bit more activity here. I'll wind up the video here, just keep this one short. The next couple of videos I'd like to get more into these up and down triangle opportunities. So hopefully we can look at that. Now before I wrap up the video, go to my website. It's tradingwithanthony.com. Incredible value. Gain access to indicators, trading tutorials, our VIP Telegram channel, market reports, trade ideas, etc. while it's on a promo discount. And for whatever reason, if this isn't for you, shoot me an email and this absolutely applies. I'm sure you're going to be delighted with the package, however. It just takes some practice. Get hold of the indicators, watch my videos, practice on a demo account, and I think you'll be pretty happy with the results. So with that, make sure you subscribe, hit the bell, give me a thumbs up, and don't miss out on my next video. Have a great day. Bye for now.